All right, guys, party's over. Holiday is over. Time to get back to work tonight. It is that time of day again here, after all. It's Tuesday evening. It is February the 16th, 2021. My name is Joseph, and as always, welcome back to your nightly newsletter. Now, tuning in for the first time tonight, it's great to have you with us because my job tonight is to help us find the best trade setups for tomorrow. That's Wednesday's trading session. I got a fantastic video in store for you guys tonight. Charts are all prepped up in the background. As you can see, got the gold, we got the oil, and of course, we got the E-minis on our radar for tomorrow. Speaking of tomorrow, boy, got some ranges on our radar. Got some big, wild moves on the charts here tonight. And of course, with Monday being a holiday, we got a lot of news coming up tomorrow, Thursday, and Friday. Not to worry, I got a bunch of great opportunities we're tracking for tomorrow's Wednesday's trading session. Before we jump in, though, and put the plan together tonight on this video, I just want to make sure to remind you, make sure you subscribe to our YouTube channel. You know, we publish this video every evening with our best trade ideas for the following day. I don't want you to miss tomorrow night's video newsletter. To avoid that problem, make sure you subscribe to our YouTube channel. Hit that little bell icon so you always get notified every time I publish something new, and you'll get an alert every time I publish this video newsletter. Also, don't forget, if you have any questions tonight, drop those questions for me in the comment section. I would love to answer all your questions, so post those questions in the comment section below. And you know, I really appreciate you guys tuning in every evening and watching this video. If you enjoy this video as much as I enjoy making it, do me a favor, hit that thumbs up button, that like button for me here tonight on this nightly newsletter. So once again, don't forget to subscribe. I don't want you to miss tomorrow night's video. Drop those questions if you got them, and thumbs up if you guys enjoy the video content here on this nightly newsletter. But enough of the introduction, though. Let's grab a look at the charts. I'm a bit behind schedule here. First day back, of course, after a holiday weekend. Always a very busy day in the office. But looking at the charts here for us this evening, what do we have in front of us here today? S&P, crude oil, gold. Boy, it was a wild session there on the gold today. Gold, of course, taking a big move down on the yellow metal. But you'll notice they're dumping, they're pumping, they're dumping. Yeah, boy, I'll tell you, this leaves what I call two open loops on the chart. Like an open loop at the low, an open loop at the high here. Now, these open loops are important, and I'm going to talk about kind of how these open loops will play into the best ways to buy and sell this market tomorrow morning and the overnight, of course, here on the gold. So if you're a gold trader, you definitely want to make sure you stay tuned for more on this. We'll talk about, obviously, bears have control right now, but multiple open loops are a big curveball as we go into tomorrow's trading session. Over on the oil here, right in the middle, oil, you'll notice, kind of went all the way back to that weekend gap at 59.73. Oil is basically a bear market into a trading range right now. I would love to get short up around some of these areas of resistance, but I've got some problems, right? One of them being a big round number, other one being a rising support trend line. I'll tell you, this might be the beginning of the end for the bears. We may make a run back up to retest those highs here for tomorrow. I'd love to sell short, but that support trend line is a big spook here for the bears. Not to worry, I'll talk about the buy side and the sell side tonight in the video. And then, of course, how about the S&P? S&P, of course, makes this big run down today. And I'll tell you, they should have had no problem finishing off a retest of that low. The direction is pretty obviously bearish right now on this 6,000 tick chart. We know the bears have control, but I'll tell you, it's how the bears finished off the day today. What is going on with the bears? They should have easily been able to retest those lows at 39.18 3/4. It has me thinking something's wrong here for the bears. And then I recall Monday was a holiday. And of course, anytime we have a Monday holiday, we have what I call the snapback scenario or the snapback setup the following day on Tuesday. So we didn't get the full snapback today. We'll talk about how the snapback might just be what the problem was on the S&P and why I want to be ready for the buy side here tomorrow on the E-mini S&P. So looking for a snapback on the E-mini here tomorrow. We'll talk about that in more detail. Maybe a reversal on the oil. We'll grab a look at that. And of course, on the gold here, wild double-barreled open loops on the gold tonight. Boy, oh boy, we have so much to cover here in this video. Now, before we jump in, though, I just want to make sure we check the calendar for tomorrow because, of course, as I mentioned before, anytime Monday is a holiday, everything pretty much gets pushed back 24 hours. Wednesday and Thursday are going to be very, very busy days here in our trade room this week. Now, a heads up, we do have oil anytime we get around the 18th of the month, anytime we get within striking distance of the 18th of the month, I'm always watching for oil rollover. So right now on the oil, we're trading on the 0321 contract. We will be watching volume on the 0421 contract. Once the volume is higher on the 0421 contract, we'll make that move over to that 0421. If you look at the oil right now, if I zoom in quickly here on the market analyzer here on NinjaTrader, you'll notice we are not exactly neck and neck, but we're about 100,000 contracts off there. So right now the high volume is still on the March 21 contract. Once that April 21 contract has more volume, once the 421 has more volume than 321, we will make that move over to the 421 contract. So keep that in mind as we go into maybe tomorrow. It's looking more like Thursday or Friday this week for that rollover. So keep your eyes on the volume if you're an oil trader like we are in our trade room. Now, speaking specifically about tomorrow's trading session, the big news of the day tomorrow, there's quite a bit of news here the next couple days here. The big news tomorrow, though, is certainly going to be that PPI number and the retail sales number at 8:30 Eastern time. Then, of course, we got the industrial production number at 9:15 and the FOMC meeting minutes later on tomorrow afternoon. The FOMC meeting minutes probably not going to be a big market moving event tomorrow afternoon, just because the Fed here in the U.S. has been so clear they're willing to support this economy throughout the pandemic pullback. So we're not expecting them to kind of throw a wild card out there, but obviously that big news is at 2 o'clock. I don't anticipate it to be the big market mover for tomorrow, nor do I expect that industrial production number at 9:15 to be the big news either. I would imagine the PPI number, right, because inflation and retail sales. Retail sales, we are a consumer economy here in the U.S., and the retail sales number will be a very good look at how the economy was doing in the month of January. So those are the two big market movers here for tomorrow. 8:30 the PPI number, and of course the retail sales number, both come out there at 8:30 Eastern time, which is great because we would love to have some big news, get a nice little shot in the arm tomorrow morning, get these markets moving. And then don't forget, we've got more big news coming on Thursday and Friday. We'll talk more about how that plays into our plan when we get there in tomorrow night's newsletter. But again, watch that rollover for oil tomorrow and Thursday. And again, the PPI number and the retail sales number tomorrow, 8:30 Eastern time, to kick us into high gear. So we'll be having a good time tomorrow morning in our trade room with that news coming out bright and early here for us. All right, let's grab some charts here now. Back to the charts. S&P's ready, oil's ready, gold is ready. Lots of different types of markets here today, but a lot of curveballs, right? You'll see what I'm talking about here in a second here. Over on the S&P, now, I talked about the S&P kind of finishing the day kind of strange, right? The way it finished the day today was relatively strange. As you can see, the S&P, the bears pretty much took control early of the day and really ran the market going lower. They finished off the day here with a strong move for those bears. And usually when you see this much strength, right, that type of move into those lows, usually whenever you see that much strength in one direction, 9 times out of 10, they're going to come back and they're going to retest that low pretty easily. That's what's confusing. That's what's concerning if I'm a seller right now on this S&P. Why are we stalled out obviously off of that low right now? It doesn't make any sense if the bears are really this strong. That's a very bullish clue in my eyes. Then I look left and I realize, where we are right now? We're just hanging out just above, right? Just above that prior high. That is not a good sign if you are a seller, right? Not a good sign if you're a seller. So now we got 2 strikes against us, right? The bears were unable to close or at least retest that low, for crying out loud. And you'll notice where they finish the day, they finish it just barely, right, above that prior major top, which was, of course, a prior all-time high. So there's smoke. There's definitely smoke, right? There's probably going to be a fire somewhere. We know where there's smoke, there's fire. So there's a lot of clues right now suggesting these bears may not be as strong as they looked this morning. And then we remember, oh, that's right, Monday was a holiday. And what happens a lot of times is we get, whenever we have a Monday holiday, and the market makes a big move, let's say, right, goes higher here like it did yesterday. When Monday is a holiday and the markets are technically open, but you know what, right? You know the banks are closed, the schools are closed, very low volume. There's not a lot of people trading that Monday session. So Monday gets this big move higher, or it could be a big move down, right? Big move lower too. We usually see these relatively decent moves on those kind of, holiday sessions. They're very low volume. They're not easy to trade. They're, as I always say, save your bullets for the day afterwards. Now, what oftentimes happens is where the day began, or the lowest part of the move up, oftentimes becomes almost like a reset, almost like a mulligan, right? Like a do-over. So what happens oftentimes is the market comes in now on Tuesday. The buyers go, wait a second. When I left off on Friday last week, here we are on Friday, right? When I left on Friday, we were way down here. Now we're way up here now. This is way too high for me to buy up here. And what happens a lot is we get what I call the snapback, right? Where the market literally gets dragged back to kind of where we left off on, in this case, on Friday, right? Friday, the markets were open. Monday was the holiday. So, of course, traders go and they obviously reject the higher prices. They pull back and they kind of get that reset, right? That redo. Okay, now let's try it again. And now they've got all that open space above them to go back and retest those highs. This reeks like a snapback right now on this chart. If I go back to my chart now, there's that big move up, right? That big move up late on Friday, on Monday's holiday session. The buyers come in Tuesday morning. They say, no way. This is way too expensive for us. They bring it all the way back, right? All the way back, and some, you can see. And now we've got that potential positioning now for that move all the way back up to retest that high. That, of course, being kind of the cherry on top for another very good reason why I've got to be a little bit concerned right now if I'm a seller. Now, of course, the buyers, right, their job is pretty easy. They're buyers. They want to get back up to retest those highs. The only problem they have right now is momentum is not very bullish. We got to make sure we get a good momentum move if we're going to get some reliable, right? If you want to get consistency in your trading results, you want to try to go with the direction of momentum. Momentum right now is not that easy to pin for the buyers. The sellers, on the other hand, would love to finish off this move back to that big juicy range at 3,900 and change, if you recall, from earlier, of course, last week, right? Earlier in the month of February. So the goal is pretty clear. The buyers want to retest these highs. The sellers want to get back down to that 3,900 low. And then we have this range, right in the middle. This range is kind of the big wild card here right now because, ranges act like magnets. The amount of the move below the range is oftentimes the amount of move above the range. So this range, as this market swings higher here, could really, really be a boon here for these buyers. All right, so now you know what's kind of on my mind here right now. Bears have control. The bulls would love to take control of this market and run this thing back up to retest the high. Or the sellers, because of course, they've got control of this market, the bears will likely be trying to sell short up around some of these areas of resistance. So how do we trade this? Well, like I said earlier, I'd love to get long on this, but my problem right now is momentum. Here are a couple things I'm looking for. For example, as the market goes higher here. If we can go higher here, I have to assume that sellers are going to be trying to use the underbelly of that range. They're going to be trying to sell at areas of resistance. What I want to get to be a buyer as we go higher is I'd like to see them go up, hold a pullback, and then jump off that moving average. If I can get these buyers, now look, they have not been able to do that once, twice, 3 times, 4 times. So I can't just try to buy that first pullback. If I buy that first pullback, I got to buy this one, buy that one, buy this one. It's not a very reliable strategy. Again, we've got to get this momentum going for the bulls. What I want to see is I want to see these bulls actually take control with a 1, 2, 3 reversal pattern. And then once I've got that momentum moving now for the bulls, now I know where the buyers want to go. And all I do now is find my entry off the low of a new hidden channel. Now what I like to do is I want to wait for that move up. I want those buyers to come in, show me they actually want this, and give me a nice jump off the moving average. Then find my level of support. I'm going to begin by drawing a trend line off that high, a trend line off of the low. This creates kind of like a hidden channel, if you will, and I want that first pullback. The first test is always the best test, right? As we always say in our trade room. Target, of course, up at that 39.59 and a quarter to retest those highs. Now, we may not get that beautiful 1, 2, 3. Again, 1, 2, 3 reversal. The market may just take off to the upside. If the market runs higher on strength, now momentum is good, but I'm worried about chasing the market as it gets closer to those highs. In that situation, I now look for a trap entry. So if the market makes a real strong run going higher, right, doesn't pull back right away, keeps on going, I'm looking for that strong move, that shallow pullback, a higher high in price. All these rules are important. And of course, that trap low. The trap will be important because as the market turns into kind of a runaway market going higher there, I want to really try to buy as low as I can, right? So 1, 2, 3, 1, 2, 3 reversal into a hidden channel pullback, or that 2 try trap setup off of those lows. Now, guys, these patterns, these 1, 2, 3 reversals, these 2 try traps, very, very common setups. In fact, they're some of the best we find every day in our trade room. If you want to get a deeper dive into all of these pattern setups, especially the 2 try traps and the 1, 2, 3 reversals, you got to check out our free trading course. Our free trading course, you'll learn my 4 favorite entry setups. Traps are definitely on that list. You'll also learn how we apply those setups to our favorite futures markets. I'll go over all the details. That way, the next time we talk about traps or reversals, you'll know exactly the rules we use and be ready to capitalize on it. Grab that link that popped up there in the upper right-hand corner. Grab our free trading course. If you want to get the most out of our time together every evening on this video newsletter, you definitely want to make sure you grab it. Now, as we go higher here, can I sell this thing? I can, but here's the problem. If I rotate off this low and start going higher, what is that going to do? It's going to give me a support trend line. That support trend line is public enemy number 1 for the sellers, right? Because they're not going to want to sell into this stuff as this trend line is standing right in their way. I like the idea that we're bearish. I like the idea of this trend line overhead. I would love to get short off that trend line, again, using kind of the underbelly of that range as my guide. But I'm very much concerned, though, about this rising support trend line. And again, those 3 things we talked about, right? Why didn't we close at the low? Why did we close above last week's high? Do we have the snapback? All of these things are coming in. I'm going, okay, I probably shouldn't force this trade going short. So what would be the best way to short it as the market goes higher here? I have a lot of concerns about having enough space, and because of that, anytime I'm worried about space, I always want to look for traps. We talked about this earlier, right, on that move higher. Strong move up, shallow pullback, higher high. I don't want to sell into the high or buy into the high, right? So we grab a look at a bear trap getting in, going higher here. This is the same basic idea here. I'm looking to get short, But again, I've got to get a trap up here right now just to free up enough space. And at the same time, I wouldn't mind seeing these buyers try a few times, right, to give us that trap entry. That would make me feel a whole lot better as this market goes higher. So a bull trap to get short off the high there. And again, all the trap setups, buy setups, sell setups, I cover all my favorites in that free course linked up in the upper right-hand corner. Now, if we do go sideways here, you'll notice we kind of picked up on a range. There was kind of two ranges here in this chart this morning. We had this market run lower and it kind of went sideways at 930. And it looked like that range was going to be the kind of the end all be all today. Kept going down, back up again. It does look like they finally broke free of that range. And it looks to me like there's a little range built in here as well. So if we do see the market going sideways here, right, into tomorrow, I'll tell you the plan stays pretty much the same. It really does. If we go sideways, I'm still concerned now about that rising support trend line. It doesn't change the fact that we've got all those red flags for the bears. I would love to get that 1, 2, 3 breakout into that hidden channel pullback. So not a lot changes if this market goes sideways. How about if we make a run going lower though? As we try to go lower, we have a beautiful example of a measured move overshoot. What that means is basically the sellers went through the measured move and then came back up. And now if they try to retest that low, that measured move is a support area that really is not that easy to break through. Knowing that, I can definitely be a buyer off of this low, but how would I buy this thing now, right? How would I buy off of this low? First step would be I'd want to make sure we take out that low. What's the next step? I've got to respect the bears. The bears have all of the momentum right now. I can't just buy at a support level if we're bearish. I have to give the sellers the benefit of the doubt. Like I always tell my clients, if you want consistency in your trading results, you have to respect momentum. So we know the bears, if we do go back and retest those lows, the bears have firm control. If I want to be a buyer on this, and I would love to be a buyer because of that range acting as a magnet overhead, I can buy it, but I have to wait for a very specific type of failure pattern, which are called nested failures. They're very, very easy. Basically, wait for the bears to try once, wait to try twice. Once those bears now have tried twice to get short, now you've got them right where you want them. Now you've got their stops above that high, and you can literally buy right into those stop losses for a short covering rally or a short squeeze going back up again. I also like to draw a trend line off of that low and buy off of that trend line. So whether or not you use the trend line or buying the stop losses there, if the market goes lower, I would love to get long with, again, what I call a nested failure pattern. And the reason why I let those bears try twice is because of momentum, right? Momentum is the key. Now, how do we sell this thing as it goes lower? Can I sell it? I definitely can. What's my concern though? My concern is this measured move is a big support level. This low is a big support level. So as we go lower, I definitely cannot get short on that pullback. However, if they can prove it to us, they want this thing going lower and we get a jump off that moving average. What do we call those? We call those 1, 2, 3 breakouts, right? Just like that 1, 2, 3 breakout move going higher. Mark the high, mark the low, buy the low. Remember, first test is the best test. Same thing as we go lower. If we do get that strong move down, be very careful on that first pullback. Make them prove it to me. If they can jump off the moving average on strength, right? If we can get something like this, right, come off that moving average, 1, 2, 3 breakout, we can now mark up that low. We can mark up that high, and the first test is always the best test, right? And keep in mind, too, we're not just simply selling the top of that channel, right? If this is the top of that channel, we oftentimes will pull back into what we call a failure, into a pullback combination. So imagine if you were to zoom in on that area right there, right? Zoom in that area right there. Think about this, what I call a failure into pullback combination off the top of that channel. Now, again, I'm just simply drawing on the screen right now. I'm going to show you a lot more real examples of what those setups look like as part of that free course I mentioned linked up in the upper right-hand corner. So make sure you grab that if you're serious about getting more consistent results in your trading. Again, we know the bears, right? They're trying to make a run down to that 3,900. All right, guys? Boy, great plan for tomorrow. As you can see, though, you've got to be very disciplined. Don't chase it, right? Don't force those reversals. Got a pretty good plan, though. Excited for tomorrow morning at 8 o'clock Eastern Time. We open a trade room. Hopefully, I'll see you there, right there with us. So S&P, we are ready to go. How about some oil? Looking over here now on the oil. Now, again, we got oil looking for a possible rollover here for tomorrow. We'll know more tomorrow morning once we get back to our desk tomorrow morning. So keep in mind, right, again, this is the 321 contract on oil. We may certainly make the move over to the 421 contract at some point tomorrow. It all depends on when the total volume is. Now, what happened here on the oil? Well, to make it, simply put here, it's a bear market into a trading range. Now, we had a very similar kind of snapback scenario on the oil, right? There's last Friday's close, right? There's the end of the week last week. There's Friday's close. We then open up, right, on Sunday evening, and you'll notice what happens, right? We get this big blast higher, leaves a gap on the chart. There's actually a gap between Friday's close and Sunday's open, right? Friday's close is right there. Sunday's open is right there. Gaps are magnets, right? Gaps are begging to be filled. So it's not a huge surprise when we open up and blast higher that we eventually come back, fill that gap, and now potentially kind of free up, right, some buying power now for those buyers to go back and retest that high. This is also the same basic idea here of what a snapback would be, right? The market takes off on a holiday session. The buyers come in or traders come in on a Tuesday after the holiday. They say, wait a second, let's wait until we go back and do it over again. They come all the way back to where the week ended, and now we're in a much better position now, right, to make that run going higher. Very similar to the S&P, where I'd love to be a buyer on this, but obviously, right, we're very bearish right now, and so that's our challenge, right? We just like on the S&P, we've got this rising support trend line. That is a nightmare for, or at least a big headache, I should say, right, for those sellers, but we're definitely bearish, right? We definitely have a bearish tone in this market. So bears run it lower. They fill the weekend gap, and pretty much the day kind of finishes the session today in a trading range. The bulls, just like the S&P, the bulls want to get back and retest that holiday weekend, that holiday high up at 1690, 1695, and the bears here, the bears would love to get back down and get into this range that we had just above that 58 bucks a barrel. Pretty sticky area down there, right at a range down there. That will be a magnet for the bears here. So think 58.15, 58.20, right, if the bears can hold this thing together here for tomorrow. So a lot of this is very similar. We talked about, right, on the S&P. We know there is a range on this one. This one's pretty obvious. Just remember, ranges act like magnets, right? So as the market goes up, we look for shorts going back down. As the market goes down, we look for longs going back up into that trading range. If we can break free of this range right now, if we can break free of this range now with the 1, 2, 3 breakout, I can find that high, find that low. I can buy that low. Again, don't take it literally, right? I'm not literally buying the low of that channel. What I'm doing here on this 1, 2, 3 reversal is I'm waiting for that pullback, and usually it'll set up for what I call a failure into pullback combination or a 2-try trap, right? That's also a pattern we can watch for tomorrow as well. So as the market goes higher here, right? As the market goes higher, maybe we see a pullback and a jump off the moving average, 1, 2, 3. Remember, it's not enough just to see a strong pop. We see a lot of strong pops in bear markets that end up failing, right? A lot of money to be made in bear markets that pop above the moving average, Buyers try to buy the pullback, they fail, and you can sell right into those stops, right? It's one of my favorite ways to trade a trending or a range-bound market. Wait for counter-trend traders to try getting in too early and then just simply sell into those stop losses. We talk a lot about that in our free trading course. So again, it's a pop, a pullback, and a go, right? A 1, 2, 3 breakout. Mark that high, mark that low. It's the first test, is the best test. Off the low of it, I'm not trying to buy that first pullback. Once again, I would love to buy that next pullback before we get up to retest the high. Speaking of which, if the market was to run, right? If the market was to run, what are my concerns? My concern is I don't want to buy high. How do you avoid buying high? Traps, right? So strong move up, shallow pullback, higher high in price. Remember, strong move up, shallow pullback, higher high in price. Look for that trap entry just below that prior swing. And also, too, keep in mind, I'm always looking for ways to draw those hidden channels. You know, I'm always looking for any way I can increase my odds of success. I'll tell you right now, if you want to get more consistent results in your trading, you always should be buying at a support level. You always should be selling at a resistance level, right? So the more support I can stack on that, the better. Trap low, off the low of that channel would be a great setup. We call those 2-try trap setups as they go higher here. And then, as I mentioned before, I've got some resistance here overhead. I've got the amount, you'll notice, the amount of the move below the range is marked up above the range. Ranges are balanced. Ranges are magnets, right? The amount below is the amount above. We're right there right now. We're in a great spot. Try to get short on this. I've got this trend line, you'll notice, coming over here, right overhead right now. That trend line, it looks like they've barely missed it there by a little bit. What's my problem, though? I would love to sell that trend line. I'd love to get short up here. What's my problem? My problem is rising support. My problem is momentum now, right, running higher here. So what's the best way to kind of get around this problem? Traps, right? Let those buyers try once. Let them try twice. Get that trap above that high. These have been one of the most common setups in our trade from the past few months here. These kind of nested 2-try traps. And again, I call them nested because there's 2 tries to it, right? The buyers try once, they pull back, the buyers try twice. Would love to see a trap high on that again because I've got that trend line coming up. If you're concerned about either buying too high, right? Like for example, on a move higher, you want to see a trap low. If you're concerned about selling too close to rising support, that's what traps are for. Traps are my bread and butter anytime I'm worried about selling into a rising support or buying into the high of day. So a couple different options there for us as we go. Now, we know that range is a magnet. What if we end up back inside that trading range and we start going sideways again? If we end up back inside that trading range now, a lot of things get easier now because that trend line is no longer going to be a big problem. The most important thing at that point, if we start going sideways inside this trading range, is going to be getting back up into this resistance area and looking for what we call failure patterns. Wait for the breakout, wait for buyers to come in and try to buy that first pullback. Again, the first pullback is not a reliable pullback setup when you're talking about a range. Rather than trying to buy that first pullback, I'd much rather wait. If they keep it going, then we know we have a 1, 2, 3 breakout pattern, right? If they don't, though, I can sell right into those stop losses using, again, we call a failure setup. Again, failures are your bread and butter pattern, your favorite setup, whenever we have a range environment. I talk a lot about failure patterns in that free course I keep mentioning, linked up in the upper right-hand corner. And again, I'll send you lots of examples of how we apply those failure patterns and trap patterns to our favorite futures markets. That way you'll get a much deeper dive into those entry setups, and I can keep moving along here right on the video. So we know as the market runs lower, watch out for that trading range. What if we end up all the way back down to that low? what's the plan now? Well, first of all, who has control of momentum? The bears do at that point. So if I want to be a buyer, what do I need? I have to respect the momentum of the bears, give those bears 2 chances, right? Let them try once, let them try twice. Again, once you've got bears trying twice down here, make sure it's at that low, right? Got to take out that low first. Once we get those bears trying twice, I can draw a trend line and buy off of that trend line as support. I can buy right into stop losses. Depending on how the setup looks, right? I can buy right into those stop losses. Again, these are called nested failures to basically use that range above us as a magnet. But remember, even though the range is a magnet overhead, even though this range is a magnet, I still have all of this bearishness that I have to atone with, right? I want to make sure I get the bears trying once, bears trying twice, and then I can make that run going higher. And again, it's a failure pattern, but it's called the nested failure because of the 2 tries, right? It's basically a failure inside of a failure. And then as you can imagine, if we go lower and these bears, if they can hold that pullback off the moving average, give us a nice little jump off the EMA, that creates that 1, 2, 3 breakout, right? They couldn't do it here. They didn't do it there, right? They might do it here tomorrow. All I know is I'll be ready for it once I see it. 1, 2, jump off the moving average 3. I'm going to mark up that low. I'm going to mark up that high. And again, first test is always the best test. We're thinking, buyer failure, right? Bull trap, a pullback setup, right? That failure into pullback combination off the high of that channel. And again, we know where these bears want to go, right? If the bears can take this thing 1, 2, 3 down, we know where they're hunting for. They're hunting for that 58, again, a little bit above that 58 and change down there is that big range target here for us. So oil, very similar here to the S&P 500. Would love to get long on this thing right now. We'll see how momentum plays out tomorrow morning. And again, we're watching that rollover as the market opens up right now. It does look like that April 21 contract is taking an early lead here. That may not be the same tomorrow morning though. So we'll watch this tomorrow morning. Usually about 6 o'clock, 7 o'clock, 8 o'clock in the morning, you'll see who has taken control of which contract month. And as always, if you need help on this, I'll be with you guys tomorrow morning in our trade room at 8 o'clock Eastern time. Which reminds me, guys, I'll put all the links you guys need to get registered for tomorrow morning's trade room. I'll put all those links you guys need right in the description of this YouTube video. So if you want to come out and join us every morning at the opening bell, come trade this stuff right along with us here on the S&P, the oil, and the gold in our trade room. All right, last but not least here over on the gold. Taking a look at the gold, we saved the wildest for the lastest tonight. Boy, what a wild session here on the gold today. Key takeaways right now. Gold, of course, began the day in a range, basically. It basically finished last week in a range, opened up this week in a range, and then as you can see here, a very strong 1, 2-legged down into a measured move. We then see this huge bounce off the low, which we assume was targeting the high of that channel you can see, right? Get that big move down, up and over, mark up that low, mark up that high. We assume that's what they were hunting for right there. Just basically an incredible move off of those lows. So, 2 legs down, they take out their measured move. Measured moves are very common in trending environments. They take out their measured move. They bounce hard off of that low. And you'll notice right away, right? The buyers didn't stand a chance. They take out those highs up around the high of that channel. And we basically finished the session. I was going to say we finished the session just off the lows here, but now you'll notice, right, they've officially now taken out these lows here. So who has control? The bears definitely have control of this market right now. That is definitely, there's definitely no question about that. Now the big question is will we reverse off of these lows, or will we push through this major 84.7? 84.7 is one hell of a bottom there, all the way back from the beginning of this month of February. 84.7, a very, very big turning point, which is always a good spot to look for a potential crown reversal. So we'll talk about that here in a moment. I'm underneath the measured move, just above that major low. And of course, I have a lot of, again, bearish momentum right now. So let's play this game, right? What if it goes up? What if it goes down? What if it goes sideways? I mentioned on the introduction there are two open loops involved. There is now actually only one open loop. When I say the word open loop is like a metaphor for a strong move in one direction. We had that strong move down, right? And when it pulled back, what it does is it kind of creates unfinished business for the bears. And as you can see, they now have gone back and retested that low. So I think of these as open loops because a strong move down will very likely get a pullback and a retest of the low. It's almost like a strong move leaves a magnet right there that will usually come back and get filled. Now, at the same time, you can see there's also an open loop going higher, which means if these buyers can get their act together here, that high up there at 14.2 is also a magnet. So we definitely have potential for some big moves here on this gold for tomorrow. Now the bears have control. As we go lower, can I buy this thing going lower? I definitely can. In fact, I would. That's one of my favorite possible setups here right now. What I'd like to do is take out this 84.7. That's the big low, right? I want that low taken out. Then I want to see those bears, right? Try once, try twice, and ideally, if I can get it, a crown reversal is basically a trap low. Now look how this pattern sets up. It's very specific. Not that complicated, hopefully, right? But very specific. I want to take out that low. I want the bears to try once. I want to see a higher high in price because that will get more sellers involved and get those bears to come in, try again, grab that trap, right? That would be the absolute best opportunity for us to buy off of this low. Another variation of that is sometimes they'll take out that low. Moving average comes over. The bears will try to sell short, and then we'll get kind of this grinding move going higher here. Now, these will also work. What you want to do is count this as the first try, mark a trend line off those highs, bring that trend line down off that low, and then wait for that, what is usually kind of a standout, obvious second try for those bears. As you can see, this one requires a little more patience. But again, it will always start off with take out the low. The bears will try to keep it going. They'll fail. Watch for that kind of grinder going higher here. Mark up that trend line. Bring it down to that low. And that's the beauty of these, what we call kind of nested failures. You can really wait for that second shot and use that trend line, use that hidden channel now to buy off of that low. 1800 is a magnet. Open loop overhead is a magnet. Range above that, right, is a magnet. So I would love to get long here if we can get the shot to do it. Now, again, the market is very, very bearish right now. So if they can hold this pullback and give us another strong leg lower here, there's a good chance, right, they make that run down to that next level. 1771.2 is a major, major low. Once we get below that, there's not much more. I mean, we literally have to go almost down to 1700 before we see much more on that. So I'm thinking here, if we make a strong run lower and we run out of space, a two-try trap will be ideal. Right? So again, if the market makes a strong run lower and we find ourselves running right into that 1771.2, that is exactly where a trap entry will be ideal. So trap entry above that high. Or if we, for example, pull back here, touch the moving average and jump off the EMA, if we can see enough strength coming off that moving average, we can grab that low, grab that high, right? This pullback may not go forever, but it will probably give you at least your first target, remove that risk, and hold on to it and see how much we can get out of it, right? One thing we know about these 1, 2, 3 breakout patterns is if that momentum is really strong coming off that pullback, the odds of getting another leg lower are very, very high. So we like to get that pullback, that first test off the high of that channel. So as we go lower here, 1, 2, 3 breakout, to try trap, right? Or a crown reversal to buy off of that low. And again, guys, I know I'm covering a lot right now. I apologize. I'm moving quickly here right now, but again, this is one of the biggest reasons why you want to grab that free trading course linked up in the upper right-hand corner. I'll slow it way down. We'll go over all the pattern setups. We'll talk a lot more details in that free trading course. That way we can make the most of our time together here on this video newsletter. The hardest part about this is going to be if this market pops, right? If it pops off of this low. I would imagine we're going to want to have to get up inside this kind of 1804 to 1814 area overhead. Here's the problem though. If this market does pop higher, that open loop now creates a big magnet, right? So my concern at this point now is those buyers, they're going to pitch a fit. They're going to want to run this thing back up to retest the high. And this is exactly where one of those nested failures comes into play. If I can get up around this 1804 area, up around, right, some of this resistance area overhead, my only concern is that open loop, right? Still acting as a magnet. Let those buyers try once. Let those buyers try twice. Again, can I get a trend line off that high? To sell off that trend line, that would be great. Or I'm selling into stop losses below that low. Either one of those will work. We'll know more about the specific details tomorrow morning once we get back into the trade room. But that's going to be a really reliable setup here. Wait for the pop off the low. The open loop acts as kind of a magnet, so to speak. Let the buyers now try once, try twice. Get those buyers kind of dig their own grave and just sell right back down into those stop losses. Target, of course, is back to retest the low. And if you have an extra contract as a runner, again, that 17, right, 71.2 is a great way to do it. And obviously, if these buyers can get a strong pop off the low, if they can hold this pullback and go, what is that? That's a reversal. Now remember, it's not enough to get a strong pop. They have to actually hold that pullback in order to take control of this market. You can see a great example of why I don't just buy with a strong pop off the low. They have to actually hold that pullback. Once they get to hold the pullback and they jump, that's that 1, 2, 3 reversal. Now we know the range is the magnet. We know the 31.5 area right overhead is a big objective. If I can get that strong push up, that pullback, and that jump off the moving average, that will be the key to flipping this around to be a buyer here. At that point, I can mark up that high, I can mark up that low, and I can get aggressive here on buying that first test, right? First test is always the best test. So now we know how to trade the buy side and the sell side if we go higher or if we go lower here. Remember, keep your eyes open for ranges this week. Once we see a range, the range acts as a magnet. There aren't any here right now besides one above us here, so we'll have to keep our eyes open for that tomorrow morning in our trade room. And speaking of trade room tomorrow morning, don't forget, we get together every morning, 8 o'clock Eastern time, and we trade our 3-step strategy together. Our video classes here at School of Trade will teach you all the good stuff, but you got to come out and join us every morning in the trade room. I'll make it easy for you. I'll put all the links you guys need in the description of this YouTube video. I'll put a big button for you guys also below this video if you're in the blog right now. So grab that button, grab that link in the description. Don't wait too long tonight. Tomorrow morning, we open up at 8 o'clock Eastern time. I would love to have you there, right there with me, hunting for the best setups, elbow to elbow tomorrow morning at the opening bell. So don't be a stranger. Get registered for tomorrow morning's trade room. Don't be afraid to call the office. That toll-free phone number will hook you right up to our office here in Los Angeles. Would love to speak to you, answer all your questions, help you get registered, or at the very least, right, get the ball rolling so you're ready for trading with us later on in the month of February. We also have live chat on the left, live chat on the right, so don't be afraid to use the chat support if you guys need help along the way. But that's it for me tonight, guys. Thank you so much for staying late tonight. This video was a bit later than I wanted it to be. It was a busy first day back as always, though. So hope you guys had a fantastic Tuesday. But we're going to get back at it tomorrow morning, though. 8 o'clock Eastern time in our trade room. Busy rest of the week. I look forward to seeing you there either tomorrow morning in the trade room or tomorrow night on the next edition of our nightly news. So that's it for me, guys. My name is Joseph. Be well out there. Be nice to each other, will ya? And be here next time. Adios, amigos. Bye-bye for now.